Well, holy smokes, everyone. What an absolute wild week it has been in the silver markets. We have seen huge rallies with silver surging over $58 an ounce, and we've also seen huge manipulation in the silver markets. So in today's video, I'm going to be going very in depth to show you exactly what is happening in the silver market, what the manipulation is happening, why there is bank faults happening right now in silver markets. Everybody is scrambling to get the real silver because the paper silver markets, people know that it's simply over leveraged and the real silver isn't there. It is leveraged over 100 to 1, so everyone's scrambling to get the real silver. I'm also going to be going over some events that's happening in the economy. Deutsche Bank just put out a report saying that the dollar is going to go down in December, and if that does happen, well then that's going to make the bullish case for silver even higher. I'm going to be showing you exactly how the major banks manipulate the silver market and much more. Also, just very quickly, this is your last chance to get the 80% discount off when you use code SILVER off Mastering the Cycles of Gold, Silver and Bitcoin. I'll put the link in the description and a pinned comment. So okay everybody, you know what time it is. Let's get straight into the news, the facts and the data. Well, look at this everyone. Deutsche Bank, Standard Bank sees December gloom for the dollar. So what exactly do they see coming and why are they so bearish? Well, forecasters are warning of a possible triple whammy of risk for the dollar in coming weeks that could worsen what's already a seasonally weak period for the currency. So why exactly is it so weak in December? Well, the greenback might be hurt by a possible US Supreme Court ruling that tariffs are illegal and the potential selection of White House National Economic Council Director Kevin Hassett as Federal Reserve Chairman. A jump in the yen if Japanese raise interest rates this month is also a risk, with a rate hike and other factors potentially causing the dollar to slide back to around Q3 lows. Now, the reason why we have to pay attention to this in the silver markets or as silver investors is because silver and gold are priced in the dollar, and if the US dollar continues to go down, well then that means silver and gold will continue to go up. And I bring up a chart here, we can see Deutsche Bank sees dollar slide returning to Q3 lows, and this happens, we're going to see a big rally. Now, also another big catalyst for silver and gold right now is if the Federal Reserve cuts interest rates. Well, we just got another massive indicator that shows that the real economy is crumbling and the Federal Reserve is going to have to cut and cut aggressively. So look at this, everyone. This is the Chicago manufacturing, and their PMI plunges in November. Now, everything below 50 is in contraction, while it says here the Chicago Business Barometer report came in dramatically worse than expected in November, printing 36.3. This is the lowest since May 2024 and well below expectations of 43.6. And we can see here in the chart how bad it is. But for those wondering, well, okay, why should we pay attention to this indicator? Well, it says prices paid rose, so inflation is rising. This is leading to stagflation for the Fed. New orders fell, so businesses aren't investing. Employment fell, again, more layoffs for the economy. Inventories fell, supply deliveries rose at a faster pace, signaling expansion. That was the only positive, but production fell at a faster pace, signaling contraction, and order backlogs fell at a faster pace, signaling contraction as well. So that's what's happening with the macroeconomic picture, what's happening with the economy. But now let's get into more specifically what is happening with silver and why they're desperately trying to keep its price so suppressed. Well, look at this, everyone. Silver hit record high with 100% price increase this year, far outpacing gold. So first we'll go over the performance of silver and then what's happening, with market mechanics that are trying to keep its price suppressed. But yes, silver is the absolute best performing asset this year, far outpacing stocks, real estate, Bitcoin. So you need to know how this market works and how to take advantage of the cycles in silver, because one cycle in silver can absolutely change your life financially. Look at this, silver futures rose more than 3% to surpass a new all-time high of $49 per troy ounce for the first time today, extending a run that saw the precious metal close at a record last Friday. Now, with Monday's gains, silver prices have doubled since the start of the year, outpacing gold, which is up about. So yes, gold is still a very, very well performing asset, and I definitely invest in gold as well. It's definitely a lot less volatile, but silver is the real winner here. And especially when you look at the gold to silver ratio, the gold silver ratio recently went over 100, meaning you'll take 100 ounces of silver to buy an ounce of gold. And whenever it's above 60, that is a screaming buy for silver. Now, silver rally has been driven by limited supply and rising investor demand. The cost to lease silver, the preferred way to acquire the metal for industrial use, rose to the highest since 2002 this year, indicating an extraordinary shortage, according to recent Deutsche Bank report. The firm's analysts predict that the supply of silver available for industrial use is currently its tightest on record. That's exactly right, everyone. Tightest on record. Now, Deutsche Bank expects demand from investors to grow next year, further diminishing industrial supply. They expect exchange-traded funds to hold about 1.1 billion troy ounces of silver beyond the end of 2026, but surpassing the record set in 2021. So this is two major bullish catalysts. We've got record demand for retail investors and institutional investors, 1.1 billion troy ounces, and industrial demand with EVs, with solar panels, with AI, with all the renewable technology and all the other technology that silver is used in, like phones, etc. There's simply so much demand, and all these vaults, all these exchanges that hold the physical supply of silver, well, they're running out. And again, for those that don't know, silver only just recently surpassed its all-time high it hit in 1980. So can you tell me what other asset class in the world only just recently surpassed the price it was in 1980 or close to its 1980 levels? There is no other asset class like this. And this shows us that silver should be much higher than the price it is today. So look at this, everyone. This is the price of silver and what happened in 1980, where it hit a high of around $35 per ounce. And then we can see it hit another all-time high in 2011, around $50 an ounce. And now we've blown past that only recently in 2025, where it's still around $30 an ounce. But you can see, this has been severely suppressed. Every time it's going to break a new all-time high, they find a way to bring it down. But I think the mechanics and all these factors that are coming together at the same time, we're going to see a massive blow off top like we've seen in previous cycles. Because when you take gold, for example, look what its price was in 1980. It was around $640 an ounce. And now it is well over $4,000 an ounce, up over 6x or 6 times what it was in 1980. So if silver goes up 600% like gold has, well, it should be easily over $200 an ounce. But again, the reason why it hasn't surpassed these levels is because of massive market manipulation. And this is not a conspiracy theory. Look at this, everyone. Former JP Morgan trader pleads guilty to manipulating US metals market for years. And he said he had learned how to manipulate prices from senior traders that his supervisors at the firm knew of his actions. So it wasn't just him. The whole bank of JP Morgan, they're all doing this, allegedly, or have been caught doing this in the past, of course. So if you think he was the only one doing it, you're wrong. Because look at this report. Will there be a silver exchange default? An expert on the silver short squeeze in London and the crisis. Well, it says here, silver prices have exploded to record highs of over $43 an ounce, igniting fears of potential exchange delivery default, a rare but systemic event that could shake global commodity markets. And the rally triggered by a short squeeze in London has pushed the metal's price above the physiological crucial $50 mark for only the second time in history, the last being in 1980 during the Hunt brothers' infamous attempt to corner the market. So that's exactly right, people. There is a massive short squeeze going on at the moment. All these exchanges that say they have silver, they are running empty. And let me show you the proof. I've got many, many more reports to go through. But just very quickly, everyone, if you're getting value from this content and you want to take your investing in gold and silver, and I'll add Bitcoin in there as a bonus as well, you can go ahead, click the link in the description or the pinned comment. I'm having a massive 80% off Cyber Monday sale. When you go ahead and use code SILVER, the coupon code at the checkout, you go ahead and apply, you get a massive 80% discount off this course where you can master the cycles of gold, silver, Bitcoin to take your investing to the next level. And again, this silver cycle is going to be unlike any other. So you're definitely going to want to know how this market works and get a look behind the curtains to how the market really functions. Because like I was saying, everyone, physical demand drives silver surge as London starts to lose control. So physical tightness in silver has reached unprecedented levels. Lease rates have spiked about 24 to 30%, while COMEX futures are in extreme backwardation. That means the future price is higher than the spot price through 2028, an even more pronounced distortion than during the 1980 Hunt Brothers squeeze. In India, asset managers and SBI have suspended new silver ETF subscriptions due to the inability to secure physical bullion. Meanwhile, US markets remain glaring outlier with COMEX and LBMA, that's the London Bullion Market Association, prices artificially suppressed despite record high spot levels across major currencies. And the market is signaling a fundamental revaluation is underway. So how big is this revaluation going to be? Well, let's keep reading. Now, gold follows the same path. Gold is experiencing a parallel surge in demand, and central banks and sovereign wealth funds and institutional investors are moving toward portfolio allocation around 20% to gold. Now, I think what is going to be the big catalyst for silver is when institutions start allocating 10 to 15% of their portfolios to silver as well, just like what they're doing with gold. De-dollarization trends, physical supply constraints, and systemic weakness in Western paper markets are driving a potential revaluation between $5,000 and $8,000 per ounce. So if that's happening with gold, we could easily see $100 per ounce silver very, very quickly. Major US banks, including JP Morgan and Citigroup, carry significant unallocated silver derivative exposure, leaving them vulnerable as physical backed markets assert real pricing. So what you have to know is the financial markets for silver and gold are breaking. People are wanting real physical gold and silver. And this is causing massive vault runs all the way from London to Chicago to Shanghai. Because look at this, silver stockpile slump in China poses new risk to a hot market. Because look at this, silver stockpiles in China slump after record exports, and exchange tracked inventories in Shanghai are at decade lows. So Shanghai's trying to cover up what's happening in London, but they're getting depleted. So investors in Shanghai start demanding their silver. There's simply not going to be any silver there, and there's going to be a massive squeeze. Silver has had a tumultuous year with prices rallying 80% to a series of highs. The spike came as gold surged, and traders also wagers that the Trump administration may introduce a tariff on the cheaper metal, and that pulled silver into the US, tightening the London market just as Indian demand boomed, triggering a historic squeeze. And now the slump in Chinese holding means the country may not be able to provide a backstop in the near term. It says if silver is tariffed, then it will lock up the silver that has already made its way to the US. If that were to occur while Shanghai markets are still reeling from the last instance in which they backed up London, then the impact will be significant. That's exactly right, everyone. All these countries are scrambling to hold the real wealth, that is gold and silver. They all know it's only a matter of time before the fiat currency fails, because every single fiat currency, not 70, 80% of them have failed, all of them throughout history eventually will fail because of government greed. Now, look at this next chart. Silver in Shanghai shifts into backwardation. Again, that's when the futures price is higher than the spot price. And the shift reflects near-term supply tightness. And now what this is all leading to is the US is going to classify silver as a critical mineral in 2025. So everyone, I know what you're thinking, well, okay, what does all this mean in simple terms? What this simply means is everybody's scrambling to get a hold of real money, that is gold and silver, and real wealth protection, that is gold and silver. Central banks are buying gold in droves, and now they're going to the next best asset class, and that is silver. All these exchanges in London and in the US, they're running low on silver. There is so much paper silver out there. People want the real thing. This is going to cause a massive price spike, in my opinion. And again, gold has surged 600% since 1980, so silver should be at least $200 per ounce, in my opinion. Not to mention the fundamentals of all these industries using silver, like EVs, solar power, AI, chips, phones, etc. All these industries have huge demand for silver. At the same time, when retail and institutional investors come in, the price simply faces massive upward pressure. So everyone, you simply cannot ignore silver and gold as an asset class any longer. If you want to learn more, again, 80% off, you can click that link in the description. But everyone, what do you think the real reason is behind silver, and how much do you think gold and silver is really worth in today's US dollars? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.